What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital FX YouTube channel. Welcome back. Today I want to talk about the breakout strategy that you can use on Deriv, right? The breakout strategy that you are going to be using trading Deriv indices. And if you are new to these indices, guys, these are synthetic indices, computer generated, that are offered by Deriv, right? So Deriv broker, that's deriv.com, offers these indices, and you can get your account by clicking the links in the description down below and in the comments section, and get your account so that you can enjoy trading these indices. So without further ado, let's just go right into it. So breakout strategy. So this is a trend line breakout strategy. What you need to do is a trend line, as you can see. So your trend line is a line, or a trend line is a slanting line that connects two or more points or swing points on a candlestick chart. So from what you are seeing here, this is a trend line that is touching this point, right? This is a swing point, a high, and this point, and this point, and is interacting with the price again on this particular point. So these yellow zones are the points or the swing points that a trend line has to touch. So the minimum for you to consider a trend line valid, the minimum that a trend line should touch is what is 2, right? So 1, 2, we're already expecting a break here, but with the issue of breaks, right, you need more touches. Why? Because the more the touches, the higher the probability of a break, right? The more price touches a trend line or a zone, right, the closer the breakout is, right? So that's just how price moves, right? So if you want a trend line bounce, right, that's when you need fewer touches. But when you need the breakout, you need more touches, like what you are seeing in this diagram, right? So when you have 3, the fourth one, you are expecting what? A breakout. So the way of trading these breakouts, right, a lot of guys advise that you take your trade as soon as it breaks, but I'm going to show you a very simple method of taking this breakout strategy when price comes back to retest the trend line. Then you go to the lower time frames and get your pattern that I'm going to show you in this video. So before we go to show you that pattern, let me show you some more examples of this trend line. So from what you are seeing here, you can clearly see that this trend line was from this high, right? So if you draw it like this, it's touching how many? 1, 2, and the third touch is a break. So this is what we are doing. What we want to see is a break. So let's just map out the touches. We have 1 touch here, then we have the second touch here, then the third touch, and the retest. So we are most worried about the retest. So this retest is what we are going to be mapping out in the M15 time frame, and to see how best you could have taken advantage of this trade, right? So let's just go again and look at V10 and see how this phenomenon was happening, how we can map out this trade. So we have second touch here and the third touch. Remember, the more the touches, the merrier, right? So we break, and this is the retest. So what we are now going to do is to go to the lower time frame and try to map out all the confluences that we need to take this trade, right? If you go to the M15 right here, you clearly see that this is the confluence. So you don't get rid of your trend line from the H1, right? You go with it to the M15, right? When you get to the M15, what are you looking for? You are looking for a double bottom pattern at the trend line, right? So this is what you're doing. Even if you go to the M5, I think the M5 is best. So the M5, you see that we have a very beautiful double bottom pattern inside the that trend line. So as soon as this prints, you are getting in. So this is your trigger, and this is your entry to this type of trade. You go in after formation of this this double bottom pattern, and if you want to sell, you get in after formation of the double top. So you go in here, we go to the M15, you see what we are saying. On the M15 we have a very good pattern that you can see here, and you go to the M5, it will be very, very defined, right? It will be magnified on the M15. So what are you seeing? You are seeing first touch, second, and the second leg, right? and the second leg right here. So this is what you are seeing, and this is how price is going, and this is how you get your trade. With that being said, let's just understand what is happening on the M15 here. Let's go back to the setup. So this is the setup. I just want to explain to you what is happening, the theory behind this breakout, so that you guys can understand and just don't get in blindly, right? So this is a price, right? So price was moving down, as you can see from here. Price was moving down. This was a move down of price and breaking the lows, as you can see, breaking the lows. But I want you to see something as price gets to this particular point. So this is a high, right? Price breaks that high by this move. So this is more like a break of structure. So when a trend line breaks, it's more like a break of what? A break of structure. Look here. Okay, let's use this one. Oh, we're using this one, right? So when this one breaks like this, we are also breaking a high and changing a what? And changing trends, right? We're breaking this high and changing trends and looking for what? We're looking for more liquidity to the upside, and this is where liquidity is found, and this is the ultimate target. So what you are seeing here is when price was here just dancing around, respecting this resistance at this particular point on this particular price, right? So when we put in a trend line, the confluences that you are going to see is that we have taken out this area of bouncing off the resistance, then we break the trend line, and we also break the this area of liquidity by this move. So when price comes back, it's coming back to retest the trend line and also the order block. So these are confluences that you can use in analyzing your charts and getting what you need from that particular chart. So when you go to the M15 now, you clearly see that that order block that we are seeing is this region here, and if you need to refine that, you clearly see that you have this particular demand zone and this M or this W that is forming on the trend line and in the order block that you are seeing here. So this is how you get to use confluences to your advantage when trading Deriv. So let me show you the last example that we started with here. So this example here, we are worried about when price retested this trend line on the M15. So if you go to the M15, this is our play here, and what are you seeing? You are seeing that this is a well-defined W or bottom top, right, that you are seeing here. So if you go to the M5, it will be it will be magnified, and you can see it clearly. So this is what you are seeing on the M5. Go back to the M15, this is your M, and you get your trades at this particular point and you go. This is what you are doing, and this is what you need to be trading, right? On the H1, you clearly see that price are kind of exhausted as it got to the trend line, as you can see here. So what are you doing? You are waiting for price to take out this one right here. So this high, you are waiting for price to move from here to that high. Why? Because this high is a liquidity zone, and what you are doing is you want to be getting to that particular high. You go back to your entry, you clearly see that when price took out this trend line, it also took out this high here. So that taking out of that high is a confluence on its own, and when price went back, it retested the trend line and went up. So this is what we are doing, and this is how we ought to be looking at these things, right? If you come here, what you see that some of these will not work as you would want them to work, right? So I just want to show you an example that did not work here, and you second touch here, then we have a break and a retest. So let's just consider this retest and see how it performed. So you see price just went about, and if you go to the M15 here, you clearly see that there was no AW or a double bottom here. Why? Because that's our confluence. You just don't get to enter here. You need those confluences for your trades to have a high probability of working out or high probability of being a winner. So before you get your double bottom, your double top, or your confluences on the lower time frame, you don't have to get involved in this type of trades, guys. I hope this was helpful, and I'll see you on the next one. Cheers. Trade what you see.